Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with what we are generally looking for. A finished A or 1, looking for 2 or B, for then continuation to the upside in a wave C or a wave 3. It has to be said that the longer price is going sideways here, the lower the probabilities we'll see this low taken. We can still have potential WXYs or sideways corrective structures where the end of B and 2 does fit in time, which means finishing B or 2 after the 0.382, but it might not create a new low. However, that is still preferred because the low that we have over here did not touch the 0.382, which usually is a minimum target for a wave B or a wave 2. The common target for B is the 382 to the 886, 41A to 39.1K, and for a wave 2, it is the 05 to the 786, 41.1 to 39.6K, taken from the low to the high of A or 1, and the fib times are also taken from the low to the high of A or 1, comparing A or 1 with B or 2, and preferably the end of the correction for B or 2 is ending after the 0.382 fib time. After a B or 2, we are looking for a wave C or 3 to the upside. Now let's look at a few scenarios that could lead to a lower B or 2 here, starting with the flat structure here, where we are looking for a 3-wave move, where we first take the highs before the lows. Here we then have a finished corrective structure in a wave A, looking for a zigzag to the upside in a wave B, where the common target area for your wave B is between the 1.236 and the 1.38, taken from the high to the low of A, which is between 44.6K and 44.3K, after which we're looking for an impulse to the downside in a wave C. Now something that you can see over here is a fib time, and this fib time is taken from the high to the low of A to compare wave A with wave B in time. And you can see that this wave B is getting quite long now, right? We're past the 3 fib time, meaning that this range over here is 3 times longer than wave A, which starts to be quite long for a wave B. Also, if we are looking for a wave B, we are preferably looking for a zigzag to the upside as mentioned. So if I then take a fib time from the low to potentially here, the high of a potential wave A, right? And then a wave A over here, A, B, and then a wave C, then you can see that we are already ranging at the 4 fib time, which is also not really what we want to see. And if we up the high of a wave A for then an A, B, C, to the red candle we have over here, so not the scan wick but the red candle here, and we double click, then you can see we're only at the 2 fib time, which would still be fine, but you can see that now I'm going to pay more and more attention to time because it becomes an important element in this range over here. If we then look at the bearish scenario, then I definitely have some things to say. First of all, you can see a WXY or an ABC on the chart. In this scenario, we don't take the highs first, we're going to take the lows first before taking the highs at a later stage. Now in this scenario, if we are looking for a wave A, B and a wave C, then we are looking for a flat structure in an A, B and a 5-wave C to the downside. Reason being that wave A is a 3-wave move here to the downside, which therefore means the only ABC that you can get is a flat structure, because for a zigzag ABC you need a 5-wave move to the downside. However, for a wave B in the flat, a minimum target is the 0.9 Fibonacci, taken from the high to the low of A, and as you can see, yes, the 0.9 has been hit. However, this is with a scan wick over here. The real wick, which is the red candle here, did not hit the 0.9, and also this high over here did not hit the 0.9. So an ABC flat here has a low probability. We can remove it from the chart. A second structure that we could be looking for, and then a WX and a wave Y, is potentially a double zigzag. Zigzag to the downside in W, then we're looking for an X and another zigzag to the downside in a wave Y. However, price, while retracing to the upside, hit the 0.7 Fibonacci. The 0.7 fib, taken from the high to the low of W, is not a target you like to see hit for a wave X in a potential double zigzag, as it significantly lowers the probabilities that wave Y is going to be a zigzag to the downside as well in a 5-3-5. So a double zigzag, WXY, low probabilities. Now then we have to look at this wave X subdegree count. At the moment I put wave X on top over here, right? So what could be a structure that would lead to wave X ending over here? Well, if we're looking for an ABC to the upside in a 5-3 and then a 5-wave move to the upside, then this wave C is very short compared to your wave A. The common target for wave C is up here between the 1 and the 1.236, taken from the low to the high, or this high, doesn't even matter. But in both cases, it's not hit. The 0.618 is hit for a wave C, but the 0.618 is a very rare target for a wave C and then an ABC, therefore never preferred. If we then look at other structures, for example here a WXY, then we need to look for, right, W, then somewhere we need an X, and then we need a Y. Y in this case can only be a flat or a triangle, and the reason is that also at the low we hit the 0.7 Fibonacci, taken from the low to the high. 0.7 is hit, significantly lowers the probabilities for a double zigzag in a WXY double zigzag here. So therefore, probabilities increase that we have to look for either a flat structure or then a potential triangle structure in wave Y of wave X. And I do realize all of this might be complex, but it's sometimes the way it goes. W, X, and then a wave Y. That is what we're looking for, a complex structure inside this wave X. First of all, this then has to be a 3-wave structure to the upside, right? So we need a wave W over here, then a wave X somewhere over here, because wave Y has to be a flat, as currently at the moment, there's clearly no triangle going on over here, right? Now, if we then look at a flat structure, we need first of all a wave A, then a B, and then a wave C. However, if we are looking for an ABC, for example, over here, and we grab the target area for a wave B, most common target area for a wave B in an expanding flat is between the 1.236 and the 1.38 Fibonacci. Now, what you can see here is that price went below the 1.618 and closed multiple candles here, lowering the probabilities. This over here is a wave B for then a wave C towards the upside. And even if I would finish wave X over here, right, if we finish X here, this is your A, it's still very deep for wave B as well. So that's also not great probabilities for a WXY inside this wave X. So in other words, it's difficult to end the corrective structure at this high over here. No? So if we then go to the second variation, we have a wave X finishing over here for then a 3-wave move to the downside, zigzag W, looking for a 3-wave structure in a wave X, and then a W, zigzag, zigzag in X, and then a 1, 2, 3, 4, 5 A, B, C, D, E structure in a wave Y to finish with a triangle. And then in wave Y here, we are looking for a flat or again a triangle, right? However, for a triangle we don't yet have enough information, and a triangle would simply mean a continuation of the range, unlikely to take the low over here. And of course, as mentioned earlier, the longer we are ranging over here, the higher the probability becomes that you will not see price moving into that target area I showed at the beginning of the video, right? This target area over here. Now, we still have some time, but we keep an eye on what's happening locally. Now here, we are then looking for a flat structure in a wave Y, because as explained, a double zigzag doesn't work. Price here for wave X retraced too high, and wave Y can then only be a flat or a triangle, but a triangle, not enough information at the moment, right? So if we then look at a flat, then this is what we are looking for. Inside wave Y, X, right, and then we look for an ABC inside wave Y, a flat structure. The most common target for B over here has been hit, taken from the high to the low of this wave A. Wave B has to be a 3-wave structure to the upside, which means this then has to be some sort of a zigzag or double zigzag structure. That's absolutely fine, right? And then we're looking for an impulsive structure to the downside. Common target area for your wave C is between the two 1.618, which is between 41.8k and 41.4k, and a rare target, but a target nonetheless, is the 2.618 at 40.8k. If we look at a wave C to the downside, we have a couple of options. An impulse, a diagonal, or a wave C starts with a double 1-2 for much lower prices. Now, I'm not looking for a double 1-2 at the moment. If this is a 1 and then a 2 and a 1-2, that's invalidated. Second 2 above the high of the second 1 here. And if we look for a 1-2-1-2, then it's unlikely this is your target because you go to much lower prices. So what we're looking for here is then either an impulse or a diagonal. Now, if we look at an impulse, still potential, then you have your wave 1, flat in a 2, and eventually you look for lower prices in a wave 3 to the downside. Common target for your wave 2 is between the 0.5 and the 786 Fibonacci. Now if I put these on the chart over here, then you can see that at the moment we only hit the 0.382. We didn't hit the 0.5 to the 786 area, which is quite interesting, but the 382 is a target for a wave 2 nonetheless. It's a little less common, but it is still a target, right? So we are then looking for preferably this to be the high and a 3 to the downside. Reason that preferably this is the high is that we're then looking for a flat in a wave A, B, and then a wave C to the upside. Finish your 2 here, and then we want to see a wave 3 to the downside. Right now your wave 3 target commonly is the 1.618 down here, but what you can see is the 1.618 is below the two 1.618s over here, which is the common target for a wave C. So that is a little bit awkward. However, still of course possible that you have a wave 1, 2, and then a 3, 4, 5. 3 does not have to reach the 1.618. The main rule for a wave 3 is that it is not allowed to be the shortest wave structure in an impulse. If price takes this high, then we need to look for potential WXY structures, but then this sideways range here is going to be quite long compared to your impulse to the downside, lowering the probabilities of an impulse to the downside. Now if we then look at a diagonal, then an ending diagonal can only have 3 wave structures: a zigzag in wave 1, zigzag in 2, in 3, in 4, and then in 5, creating a diagonal structure. So that means that in this move to the downside, we need to find a 3-wave structure that fits the rules of zigzags, as all of the waves in an ending diagonal are zigzags. So in this scenario, we are then looking still for a wave C down, but then a diagonal, where arguably we have a 3-wave move here, right? Where then preferably this is the end of your wave 1. However, if we think about a zigzag in a wave A, B, and a wave C, your common target for C is between the 1 and the 1.236, which clearly has not been hit. Price didn't even reach the 0.618 over here, which is a rare target for a wave C in a 3-wave structure. Now this increases the probabilities that the low here is not a wave C or a wave Y, but it increases the probabilities this is a corrective low, where then price is still going to be looking to move below these lows over here, right? Where then the move to the upside is a corrective structure, and we still have a bit more downside to go based on the probabilities of the length of this structure over here. Now we do have CVD divergences. We actually have bullish CVD divergences. We also have bearish ones over here. I'll show them in a second, by the way. But we have bullish CVD here. Target is above this high, then it played out, right, and it's invalidated if price takes the low. And also as price moved to the downside here, we had here bullish CVD divergences as well, and of course a double bottom. The target for the bigger bullish CVD divergence here is this high, right? Now the bearish CVD divergence on the chart, by the way, you can see here the bullish CVD as well. So we have on blue, higher low on price over here, but a lower low on the CVD. So that's a bullish CVD divergence. And then more locally here, also we have a higher low on price, lower low on the CVD here on blue. That's also a bullish CVD divergence. And the bearish CVD is a bit more awkward. There's little less probability, one has to say, but that is with the red candle here. On the 5-minute, you have an order block there. So if I go to the 5-minute, then what you can see is that we have the green candle here, and this one green candle has this yellow CVD, but you can see the dotted line is above the yellow CVD here. So there's a little bearish CVD divergence with the order block, but I would argue that is not as high probability as the one you have here, as you have a bit of a local uptrend. But remember what I said, right? If we take the high here, but that's then also what I have in the probabilities, that if you take that high, probabilities will switch to neutral / upside, because a wave 2 here for a wave C down becomes a lower probability. And the only bearish scenario, I've been checking this range for a while, and the only bearish scenario that at least fits a little bit is then this flat scenario for a bigger WX and then a Y, besides the fact that of course in X this has to be a 3-wave structure, not a 5-waver, which is still a little bit awkward to me. But that eventually leads to the probabilities you see on the screen here, that on the 4-hour right? Probabilities are still higher. We're looking for a B or two, lower prices, and then a flat structure or potentially continuation. However, as mentioned, the longer price is ranging here, right, the lower the probabilities for a deeper move to the downside. So we really got to keep an eye on time now, as this range is going to take so long. Now on the micro over here, I wrote that the probabilities, which is pretty much here locally, this range, probabilities are neutral. We need patience, proof of support, proof of resistance. We have some bullish CVD divergences that might increase probabilities for price to move up. Preferably price takes this high, which switches the probabilities, at least on the micro, to neutral / upside. There's not a big change at the moment still, like, oh, it's a clearly 80-20% upside downside. I prefer to wait for more information. Yes, the bearish scenarios are very difficult to find, right? The flat is the only potential structure. Preferably you then want to see bearish CVD divergences between the high and the lower high instead of the bullish CVD, no? So potential for a move to the upside to take the highs. We have also one high, two highs, scam wick, and eventually here the fourth high. So there is some liquidity, but also towards the downside we have the double bottom, because locally over here I have a question mark behind it. I say take the double bottom, question mark, because the move here to the downside has a very short second leg. If we are looking for a three-wave structure to the downside here, this second leg down did not even hit the 0.618, which is quite unique. Let's say, however, that of course first of all means that we need to see some proof of resistance or weakness on the chart, and first we need to then invalidate the bearish or the bullish CVD divergences, and if they do play out, we then need to see price moving down again based on some resistance, right? Now if we look at the levels around price, yeah, we have the current monthly point of control at 43k. But that is pretty much it. We have a daily naked point of control at 42.1k, weekly at 43.9, weekly at 41.5, right? These are the support resistance levels we currently have around price. So these are the ones that I'm going to keep an eye on. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.